Hi, I'm Tom Elliott with another financial markets update for Hodges Real Estate. Well, there's a lot of very unusual things happening in financial markets at the moment, some of them good and some of them not so good. Let's cast our minds over to the United States. Now, the good news about the United States is that the US Federal Reserve, their central bank, like our Reserve Bank over here, has continued to print money. Now, in the long run, that might be quite bad, but at the moment, the Federal Reserve is going to continue printing 85 billion new US dollars every month, at least until the American unemployment rate gets down to around 6.5%. That's generally good news for markets because it means there's plenty of money about and it's finding its way into share prices, real estate prices, bond prices, and pretty much everything else. The bad news in America right now, though, is the political impasse between President Obama and the Republicans, in particular the right-winged element of the Republicans called the Tea Party. Now, President Obama has hit yet another debt ceiling. US debt has now reached, this is government debt, $16.7 trillion. That's easily the highest it's ever been. And normally in the past, when the US hits its debt ceiling, both sides of politics simply agree to lift it, as they've done almost every year since the end of World War II. This time, however, the Republicans are digging in their heels against President Obama. He has a big healthcare package, appropriately named Obamacare. They don't think it should be passed. They want government spending cut. Obama says no, healthcare is very, very important. As a result, the US is starting to shut down, at least from a governmental perspective. National parks are shut down, war memorials are shut down. And if this goes on for another 8 or 9 days, well, who knows? The American government could potentially default on its debts. A resolution is the most likely outcome. However, if it doesn't get resolved, well, things could get very, very difficult very quickly in financial markets. In Europe, things are still a mess. Most European countries, particularly in the south, are a basket case, but that is known. Nothing has really changed. No real shocks there. I did note, however, though, if you look at the unemployment rates in countries like Greece and Portugal, they're both approaching 30% now. It is astonishing to think that a third of people who could work cannot find a job in those countries. And I do think that long term, countries like Greece and Portugal, possibly even Italy one day, might consider pulling out of the Eurozone. Still, there's no sign of that right now. In Asia, the Chinese economy is arguably moderating its growth, but it's still around 6.5 to 7% per annum. China at that rate grows the equivalent of a new South Korea every single year. It's astonishing when you think about it, and obviously that has been and will continue to be very good news for the Australian economy. And speaking of Australia, well, things here are actually looking pretty good. Now, of course, just on a month ago, we elected a new government up in Canberra. That was good news. Tony Abbott, as the new Prime Minister, can probably claim to have a strong mandate to start getting things done. Unfortunately, we all seem to lose our collective heads when it comes to voting in the Senate. And when the new Senate forms midway through 2014, all sorts of weird and wonderful minor parties, Clive Palmer's party, the so-called motoring enthusiast party, and others, will have the balance of power. So for all that Tony Abbott claims to have a mandate in politics, he's going to have to deal with a rather fractious Senate. And of course, the other thing Tony Abbott's having to deal with in the short term is the expense gate scandal that appears to be gripping Canberra at the moment. Politicians, as they have always been in the past, becoming rather too free and easy with our money and claiming that pretty much everything they do is a justifiable expense and therefore borne by the grateful taxpayers, that is all of us. Still, consumer confidence is up, business confidence is up. It's too soon to say whether or not the Australian economy is really starting to improve again. In fact, most economists feel that the local unemployment rate will actually continue to rise. Right now it's about 5.7%. Most forecasts have the Australian unemployment rate topping out at between 6.25% and 6.5% sometime in the next 12 months. Okay, so what does this mean for the real estate market? Well, the continuation of money printing in America is good news for global interest rates. It means they stay lower for longer. And of course, we know that here in Australia, the Reserve Bank has cut the official rate to its current record low of 2.5%. The big banks have passed on the bulk of these cuts. As a result, at the moment, you can do what I've done and fix a chunk of debt over the next 3 years for less than 5%. And that is an historic low. It's an excellent deal. In fact, I heard the head of the National Australia Bank, Cameron Klein, suggesting that interest rates are very close to their bottom. So now, as I've been saying over the past few months, is probably a good time to fix rates. The property market in Melbourne, particularly housing, is having a mini boom right now. We've got a combination of all sorts of good things. I mentioned very low interest rates. We've got increased interest from overseas buyers, particularly out of mainland China. They're a growing force in our market. People are feeling confident about jobs, probably a bit more confident since the election. As a result, the clearance rate, especially around the inner and bayside suburbs, is now approaching 80%. and 80% is a very healthy property market. In Sydney in recent weeks, the clearance rate has gone up to 85%, which suggests that Sydney is growing very, very strongly. House prices right now are just about at the highs they experienced in early 2010. They did, of course, fall back a bit between 2011 and 2012, but it seems that in late 2013, we're going to probably start hitting record highs very, very soon. So the biggest issue, as always, is affordability. However, with interest rates cheap, the job market reasonably good, and consumer confidence improving, it's very hard to say that the local property market will do anything but continue to rise over the next few months. It's a bold prediction, but one I'm prepared to make. All right, thank you very much for your company. I've been Tom Elliott with another Financial Markets Update for Hodges Real Estate.